Everybody, Chris Bober. Is it good?
Yep.
Hey everybody, Chris Bober here with Team Bober and Nebraska Realty. Of course, we are getting out of the summer and kind of getting back into that get back to work mentality with school starting this week and next week. So I thought this would be a perfect time to bring you an update on where we are in our marketplace. And what we have here is Nebraska Realty does a great job for its agents and for the general public in giving us a snapshot of our market. They do it every quarter, they do it every month, and they also do it a couple times a year. So today we're going to look at the 2017 mid-year market summary, and in doing that, I'd like to help you understand kind of where we are and where we've been so that we can kind of maybe predict a little bit about where we're going. So as we look at the market statistics here, we can look in here, and my assistant is going to scroll it down just a little bit. The first stat we're going to pull up here is the monthly residential closings. And you can see by the graph and the line here that there's definitely a seasonality to the market. And it goes down in the winter, and actually will go down a little bit in the summer, in the early fall, then it'll go back up. Okay? The orange line here is last year's statistics, 2015 and 16, year on year. And the gray graphs here are the past 12 months. So what you've seen here is, and we experienced this for probably the last 3 years, is that year over year we've had records every year. We've had increases every year in our monthly closings, of course, which of course led to annual closings being on record pace and setting records the last couple of years. So, but as we see with January of this year started, we've had 1, 2, 3, 4 of the previous 6 months, of the first 6 months of 2017, monthly residential closings were below last year's average. Now, this is the first time this has happened in 3 or 4 years. I think it's fair enough to say that it's a trend going right now to where we're seeing closings starting to slow down. Now, the market's still great in a lot of ways, but what you see here is that we are not spiking like we have been before. Maybe we're just leveling off a little bit. So there's a couple more statistics I think we want to kind of look at. We'll scroll down here. This is a great statistic that I like to show here. It's called the absorption rate. Okay, the absorption rate is a rate at which homes are sold on the market. Basically, it's the inventory that we have and predictably how long it takes to sell that inventory. And one of the things that people ask me so many times is, oh, the market's just great right now, isn't it? And in a lot of ways it is great. There are also definitely some parts of our market that aren't so great. So if you look at right now, these numbers down here represent the price ranges. Well, you'll see that especially in the lower price range, properties are selling super fast, okay? The absorption rate under $100,000 is 2.0, which means that we have about 2 months of inventory given our current pace. 100 to 250,000, which is the bulk of our market, is only a 1 month. Now you think about that, there's a lot of properties out there that aren't selling, so there's a ton of properties that are selling really, really fast, in days or hours even sometimes. Not always the best thing, but it is a fast moving market. As we get to 250 to 500, you'll see that of course 3.6 months of inventory is out there, getting more towards a balanced market. The 250 to 500 is probably the most stable market we have. Probably just within expectations historically, it's very, very kind of normal really. As we get to 500 plus, a million plus, the absorption rate spikes up dramatically. So this is where I can see the cracks on the edge of our market that are starting to kind of show up. Where in the last few years, these things were quite a bit lower, and luxury property in Omaha is always hard to sell. It's just not a huge market. But now, if you have a $500 to $1 million house, it takes you the inventory is almost 10 months worth of inventory. So you can expect to try to sell your house in a little bit less than a year. And if you have $1 million plus house, and I know because I've been there, it takes you almost 2 years. There's 2 years worth of inventory. That's how slow that market's moving. And there's a lot of different reasons. Obviously, there's not that many people who are going to buy $500,000 and $1 million houses. So that takes some time, but they're also up against new construction. So these days, when you have a new construction house, they're selling pretty fast, and people are willing to pay a premium for a new house as opposed to a $1 million house that might be a few years old. So that's one of the reasons we're looking at. Of course, if you look at these statistics here, we're down between 3 and 4% of active, pending, and closed listings for 2017. So again, not the worst thing in the world, but it is a fact that we're having to do. So we can look at some more statistics here. The average price, okay? So we see that the number of closings are gone down, and volume is down a little bit, but you look at the average price it has gone up. So 2014, just 3 or 4 years ago, the average price in Omaha was $180,000. That's the average sale price. Okay, so it's gone up to $212,000. That means with all the transactions that happen for houses, the average price is $212,000. That is huge. It was a long time when we didn't see 200,000. I mean, this is a major spike that's happened. It's up almost 6% from last year, which is a ton. That is a big spike in housing. In Omaha, we typically see between 2 and 3% appreciation. Some other parts of the country have big spikes, but they also have big valleys. We are experiencing a big spike, which is maybe outpacing the affordability of the homes out there. So there's two different statistics here. I want to kind of explain them. You have the average sale price and then the median sale price, right? So the average sale price is if you add all the pricing up together, you divide by how many transactions, that's the average price that is per thing. The median sale price is where does the majority or the middle of all the transactions happen. So because the average sale price is higher than the median sale price, that tells you that there is a whole bunch of sales that are 179 or below. So that's dragging from the average down to the medians. I mean, there's a whole bunch of them up here, and there's just not as many up here. So as you can see, the average price is still high, but still there's a lot more houses being sold way below the average. I think new construction is driving that up. There have been some bigger sales out there too. But again, this right here pulls this down at some point, because at some point this pulls this down and becomes a balanced market, and if this goes above that, then we get to more of a buyer's market. So that's a great statistic to look at, to where this is going up higher and higher, and this standard deviation is getting off just a little bit, and that eventually has to come back together. So we'll scroll down and look at a couple more statistics that I think just might be a little bit of telling. So we just talked about how the median sale price is lower than the average sale price. Well, that's because look at all this number here, between $100,000 and $250,000 is where the bulk of our market lives. So almost 60% of the houses sold in the Omaha area are within this price range, okay? Now, when the average sales price is close to the top of this, that tells you there's a whole bunch of those in there. Couple things also here to look at. The 200 to 500 still remains a strong market. About a quarter of our market is between that. That's a good, healthy market. New construction is driving that a lot. There's a lot of houses being built between 300 and 500,000. As you can see, 1 million is not even on the graph, and 500 plus is a very, very small part. So 3% to 4% is the luxury market in Omaha. The rest is the normal market. So another thing you want to kind of look at here is the average new construction price. We talked about the price of an average house. It was a little over 200,000, 212, I think it was. Well, right here, if you look at the average new construction price, it's 331,000. Existing sale prices, if you take that down, because we take this out of here of the average sale price, average existing sale price is just $193,000. So this is a very, very large gap. And when we talk about affordability, anywhere between $200,000 to $300,000, it's almost not impossible, but there's not a lot of new construction sales in that market, and that's where a lot of the market wants to reside. That's why we're also maybe looking at maybe a little bit of a affordability gap and having the market pull back just a little bit. So a couple more statistics to look at before we just kind of follow up here. These are the average days on market. Nebraska Realty, we're very, very proud that we lead the market in days on market. I think it's because our agents are very well trained and we price things correctly. It varies from company to company and mostly individual agent to individual agent. But on the market stats, you look at right here, again, the average days on sale, 35 days on sale for around 100,000, just 18 days on market is the average days on market. Of course, the median is pulling it down here. Again, when the median pulls the average down, that means there's a whole bunch more that are selling super, super, super fast. Really good if you're a seller, but buyers are having a tough time finding things, and of course the affordability comes in, and even right here 250 to 500, there's still a big discrepancy between median and average, where the average days on market is still 41. So if you get outside of 250, you're still looking at 30 to 60 days to sell your house if you're under $1 million. Of course, if you're over $1 million, it goes up because that's a very rare situation. So these are some of the statistics, and we can kind of look down at the bottom. One other thing we'd like to throw out there is, of course, we do lead the market in average days on the market. We sell our stuff faster, and really statistically, when you do sell property faster, it sells for more money. We also look at our growth here at Nebraska Realty, that we are now at 20.6% of our market. We are the second largest real estate company in Omaha, the largest independent owned in Nebraska. So anyway, those are some great statistics that I really like to share with you all out there for customers and clients to let you guys know what's really going on in the market. Now, from these statistics, you can take and extrapolate these statistics and give your own opinions about what's happened, why it's happened, and where it's going to go. And we'll expand on that maybe in some future videos. But as you can see right now, the real estate market is still in great shape. Number one is it's definitely a seller's market. It's driven by the intense demand and need for people to build and or buy houses. There's a major shortage of inventory in our market, and we've known this for some time. New construction, other things are starting to catch up to it. We'll have to eventually close that gap, but that's where we are now. We are starting to see a little bit of tailing off of our super spike that we've had the last few years, maybe getting more towards a balanced market. I think we're in a very different market, and we will be by the end of the year than we were maybe at the end of last year. I think affordability is going to become an issue. I think some buyers are going to start pulling back because right now when you go out to buy houses, it's gone up so fast. Some people see what they're getting for their money and they don't like it. Now, the good thing is money is still cheap. Interest rates are way below the historical average. That'll play a factor too. So as you look at making your decisions in the real estate market, I always tell people, you really don't want to try to time the market because you're not going to catch both sides at a really good time. It's either a seller's market or a buyer's market typically, and you're going to sell your house for a bunch of money, but you have to go spend a little more on a house you want, or vice versa. So at Team Bober and Nebraska Realty, we're here to take care of your needs and try to get you the best results within that market, because we can't guarantee the results. What we try to guarantee is the process. We're here to help facilitate the process, to over-communicate with our clients and help negotiate the best possible deal for our clients so that they get their needs taken care of. So if you have any more questions about the market, or if you want to maybe get out there, maybe you want to go look for someone to buy or invest in, or you maybe look to sell some real estate, call the pros at Team Bober. Our motto is we'll tackle the market for you, and there's no cost for us just to talk on the phone and to help educate you on what's going on for what is usually one of the biggest transactions in your life. So thank you so much for tuning in. I'll be doing more and more stuff about our market and the good and bad about it, and we'll see you soon. Have a great day.